If you guys have clicked this video, it is because you are likely having a problem with the inverse fair value gap, and I am here to help you guys fix it in just under 5 minutes. So looking at this diagram I created right here, this is a pretty close to what really happens when you trade the inverse, where you might see price go up, right? We end up taking down, we end up pushing down with volume, inversing this fair value gap, and then obviously running back up. Now, a lot of people might be asking, Junior, why does this happen? Why does price push down lower, retest this fair value gap, and then just run right through it? Well, it's actually very simple. The reason is because there has been no liquidity taken, right? If we look at this from a higher time frame standpoint, the drawn liquidity hasn't been taken. We were creating equal highs up here for this example specifically. We created equal highs up here. We end up pushing lower just to inverse to take it out again. And then from here, you'll likely see something where price would come up, right? We'll see something like this. And then we'll create a fair value up here, inverse that, and then continue our direction lower. This is what you'll likely start to see. The whole situation with actually playing the inverse fair value gap is simply just waiting for a sweep of liquidity. It is never going to work successfully if you don't get some type of buy side or sell side taken. Just looking at this example right here, we can see one thing, right? We have a fair value that's put in place. Price ends up running this, 3 times in a row right here. And what happens is we have relative equal highs up here, right? We have relative equal highs. Obviously, we have our drawn liquidity down here. So a typical trader would look at this and say, okay, this is an inverse. I'm going to enter a short position right here. Right, let's say they enter a short position right here. I'm gonna have my stop at the high, and I'm gonna look to target that sell side down there. This is what a typical trader would do. You get filled in, right? You get tapped in right here momentarily. You get put in profit for a little bit, and then immediately stopped out. Why did this happen now? Why did we stop this out and continue pushing towards that direction after getting stopped out? Well, it's simple. There was no type of liquidity taken. You have to wait. You have to wait. Look at it from a standpoint of where price has to manipulate. Okay, this inverse gets put in. I am not taking this trade yet. Why? Because I need to see confirmation. Price comes in, sweeps out this high. Okay, bingo. Look at this right here. This fair value gap now gets put in place. This fair value gap gets ran through. Now I have the confidence of taking this trade here when I stop at this high. And now I can look to get a higher risk to reward targeting this drawn liquidity. And what happens now? Price ends up smacking that for a 6R. All right. So now in this example, we can see that price creates a inverse fair value gap right here, right? We come in, we might have taken out this low down here. We can end up pushing up price action, right, to come to these highs, possibly these highs up here as well. But there's still a problem. We don't take out that high. We actually end up inversing this. It works pretty well, and then we end up running it right back down. Why? Why does this happen? Well, it's simple. These lows right here were still not taken, right? The higher time frame draw wasn't still taken. So you have to pay attention to what is happening to the left of you in order to take this type of trade. You can't just, okay, this inverse worked for a bit because we had this internal sweep, obviously pushing up and then moving right back down. Again, it does not work like that. You need to sweep some type of higher time from liquidity, which is right here. This is a 5-minute chart. Price sweeps its low, pushes higher, retraces right back down, stops everybody out who was in the long after this. After we sweep out this low, guess what happens? We end up coming in, inverse this fair value gap right here. We get tapped into it now. We can have our stop at the low, look to target this high and this high up here. We could look to target these equal highs. And what happens? TP gets hit. It is that simple. Once you can understand that your inverse fair value gaps will not work if you're just taking them inside of a range like this and not waiting for the actual sweep of liquidity on the external side, it will not work. It will only work if you get some type of sweep. You get a move up with volume, and then from there, the retest will be your entry, and you can make more. You can make a lot more money off of that. Let's just say that you can make a lot more money off of that. So, again, this video was under 5 minutes. I hope it really did open your eyes up on how to actually use inverses correctly. Again, it will only work after some type of sweep of liquidity. If you are playing inside of an internal range like this, you're likely going to get stopped out. However, if you wait for the sweep right here and be patient, that move will get rewarded, and you will see your profits become more. So, with that being said, I'm going to end this video here. Hope you guys did enjoy this video. If you did, drop a like, subscribe. The free Discord is in the description down below, so make sure to join that. And yeah, I will catch you guys on the next one. Peace.